Okay, good afternoon, ladies and gentlemen. Thank you so much for coming to this event this afternoon. So if you please take your seats. So this event is all about financing the transition of the real estate sector towards net zero. My name is Sarah Kemmett. I work with the UN Environment Programme's Finance Initiative, and I'll be your MC and moderator for the event today. Just to explain a little about what we have in store today, we have some opening remarks from Global ABC, a very important initiative in this area, and the head of Global ABC, Gulnara Rol, will be here to tell you a little bit about that initiative. We'll then have Sharjeel Bashir, who is the chair of the Net Zero Banking Alliance and Chief Sustainability Officer from First Abu Dhabi Bank. I'll then give you a bit of an introduction to the Net Zero Banking Alliance, and then my colleague Kavita Sashwani will tell you a little bit about some of the work we're doing on circular economy and how that can be a key enabler. We're then going to have an hour-long panel discussion with a really fantastic range of speakers from private financial institutions and development finance and venture capital. So we've got some really good perspectives to bring into this debate. So without further ado, I will hand over to Gulnara Rol, the head of Global ABC, to tell us more about that. Thank you.
Thank you so much. Thank you so much, Sarah. And we're so pleased to be with you because, it's a finance COP. And without finance, we cannot really move anywhere. And I think the whole COP is speaking about finance, but we need to be very, very concrete about very concrete solutions. I'm really excited about the session. Yes, and this is why I'm really happy to say a few words about what actually Global Alliance for Building Construction is. So it was established in 2015 during the COP21 to really bring together all different stakeholders working on the building sector decarbonization. So it's really the mission about the net zero building sector. So we have, in the Global Alliance, we have 42 governments. So we have the national governments, local governments. We have a very substantial group of academia, private sector, and I think and this is also because the co-chairs of Global Alliance is the government of France, Ministry of Ecological Transition, and the World Business Council for Sustainable Development. So we are really trying to bring as much as possible the private sector. So if you have any advice how we can bring more finance and private sector people, we would really appreciate. I mean, during COP, after COP, let's discuss and let's make it happen, because we want to be super practical, super operational, really to help countries and cities to achieve their building decarbonization. How Global ABC is working. So Global Alliance, we are secretariat, we're sitting in Paris at the UNEP Cities and Buildings Unit. And then we have, I think now 7 thematic so-named hubs, or working groups hubs, looking into the data. So for instance, under the data, and it's usually co-chaired by our members. So for instance, on data, we're working on kind of digital twins of buildings, so building passports. We have building efficiency, materials, a very big part, especially looking into the building materials, circularity, biomaterials. Now we also have, so there are seven working groups, which kind of are very mature discussions, but very much multi-stakeholder discussions. And they're also connected to the technical cooperation projects that we as a Cities and Buildings unit are implementing in countries. So, and this is where, again, opportunity for collaboration. So one opportunity for collaboration in the working groups, where we are working kind of on methodological basis. And I'm sure many of you are already part of the finance hub as well. I don't know, anybody is engaged in the finance group of the Global ABC? No? Well, then we should invite you. We should invite you into that working group to be part of discussion on the finance for the building sector. We also now established new kind of action group. So the idea is that action group, like you also, if you have like a proposal for a topic to discuss, you can propose to Global ABC establish kind of an action group, and it works for a year, and then if it survives, like if the topic is actually of interest to membership, then it transfers to be like a hub, so then it's kind of hub, it's more stable, regular work, but action group kind of a trial. So we have now new action groups on higher education and research. Yeah, so many people whom I see online all the time, but research organizations, and again, it's very practical because with the higher research institutions, what we did, like they're preparing project proposal to the European Union, cost, so we're also keeping their hand and, for instance, proposing them partners. So we also can help you to develop, for instance, horizon projects, cost projects. We also now have a very important action group on subnational governments. So because implementation is taking place at the very local level in the regions and cities, and we're working with many cities networks like C40, ICLE, of course, our main partner, Global Covenant of Mayors, World Resource Institute. So what I wanted to say also, Global ABC is like, it's a very big platform, but it's also plugged into other networks. For instance, if World Business Council is our co-chair, of course, they have their own network. If we work with the cities network, they have their networks of cities and regions, for instance. So, and then many methodologies that Global ABC is developing, we are implementing in countries. For instance, we just launched last week, it's a World Urban Forum, and we'll be again launching it here, for instance, national roadmaps. So national roadmaps for decarbonization of buildings. So it's like a very elaborate methodology by Global ABC in cooperation with UN Habitat and UNOPS. So for instance, we just launched a regional roadmap on building sector decarbonization for Arab states. There are 18 countries working together. So they're putting together kind of the concrete methodology how to decarbonize the sector and achieve the NDCs. We just also launched the national roadmaps for Senegal, Bangladesh and Ghana. And right now we actually won also a key proposal for Kenya to do the roadmap for Kenya. And many more projects. Mostly we're trying to focus on Global South because this is where urbanization is developing quite quickly. So especially Africa, Southeast Asia, this is where we're developing more and more projects. So again, on expert level, it's also a good opportunity to connect. So if you have any questions, happy to discuss, but I don't want to take more time.
Thank you, Gulnara. Really, really important work and fantastic global leadership and global coordination. Thank you. So now it gives me great pleasure to introduce Sharjeel Bashir, who's going to tell us a bit about the Net Zero Banking Alliance and also the work underway at First Abu Dhabi Bank. Thanks, Sharjeel.
Thank you, Sarah, and thank you very much for convening this conversation and discussion. As Sarah mentioned, my name is Sharjeel. I'm the Chief Sustainability Officer at First Abu Dhabi Bank, and since the summer, I'm also the chair of the Net Zero Banking Alliance steering group. The bank-led UN-convened Net Zero Banking Alliance brings together a global group of banks that are committed to independently aligning their financing activities with pathways to net zero emissions by 2050 in line with the limiting global warming for 1.5 degrees. The membership of NZBA continues to grow. Since its inception in April 2021, where 43 members was the signatory to the alliance, since then more than 100 banks have joined, so now more than 145 banks are member of the alliance from 40 countries. OneFab joined NZBA back in 2021. It was the first bank from the region in the Middle East to do so. As a leader in the region, FAB was selected by the NZBA members to represent the Africa and Middle East region to the NZBA Steering Committee in the summer 2023. And this summer, my fellow steering group members selected me to the role of the chair. FAB is proud to contribute to the NZBA and feel it's our emerging market focus that means that we can contribute significantly, as we know that some of the challenges that are faced in emerging markets are significant and how we can support on the journey of decarbonization. Banks commit to setting immediate 2030 sectorial targets in line with the latest science using low or no overshoot of 1.5 degree scenarios. NZBA member banks are making significant progress. When NZBA was founded, no bank had set 1.5 degree aligned net zero targets, specifically for any of hard to abate sectors. Now well over 100 banks have done so in a range of 9 carbon intensive sectors, including real estate. We do know that buildings and their construction account for nearly 40% of global energy related to CO2 emissions, and more than 34% of the energy demand in 2021. About 28% of global emissions are emitted from buildings operations and related energy usage. Retrofitting old buildings and creating zero carbon new buildings is one of the largest economic opportunities provided by the transition to net zero. The real estate sector is also central to attempt to adapt to extreme weather. At First Abu Dhabi Bank, we have set a target to reduce our financed emissions by 45 to 55% by 2030 related to real estate sector. And so far, we have reduced 11% compared to our baseline for 2021. We aim to accelerate the development of eco-friendly buildings and enhance the energy efficiency of existing infrastructure in order to support the sector players' growth and transition. We at FAB have also increased dedicated purpose lending to companies operating or investing in low-emitting buildings, and we are encouraging clients to consider sustainable building certification programs as well. In September this year, we hosted a real estate summit in Dubai, where we invited the full value chain for the real estate sector, including developers, suppliers, policymakers, etc., to discuss how we together can work on decarbonizing the real estate sector in the Middle East. FAB is also partnering with the UAE's Ministry of Energy and Infrastructure on the National Green Certification Program. Here we will contribute by developing and offering financial products that support green initiatives and provide financing solutions for projects that aim to improve energy efficiency, subject to usual credit assessment, but also promote awareness and adaptation of green certificate programs. And this is something we believe that not only us, but we can collaborate with the whole finance industry to make sure that we as an industry come together and can support the real estate sector. Thank you all for your efforts on decarbonizing one of the most economically important sectors and your contributions to this very, very important topic. Thank you.
Thank you, Sharjul, and thank you so much for leading the Alliance with this really important work. So it now gives me great pleasure to just tell you a little bit more about the Net Zero Banking Alliance. So as Sharjul said, it's a group of 145 banks, all committed to net zero. And sorry, just got a bit disorientated then. By joining the Net Zero Banking Alliance, members have committed to set 2030 and 2050 targets in line with 1.5 low or no overshoot scenarios, and the targets need to cover 9 high-emitting sectors, which includes real estate. And so far, we've seen 76 of our members setting emission reduction targets for their real estate portfolios. We have had a working group on real estate that's been looking at how banks set targets and thinking really about all of those decisions that they need to make when they're looking at their portfolios. So we've produced this document. I could encourage you to go to our website to find it. It outlines many of the main considerations that banks need to take and provides a foundation for setting and improving their targets. It covers metrics, methods for calculating aggregated emissions, and scenario options for both residential and commercial real estate. The focus is really on operational emissions arising from the real estate sector, where many banks still face challenges, even there, in collecting the data and using transition pathways. The decarbonisation of this sector really requires a supporting, enabling environment with conducive policies, incentives, data infrastructure and harmonisation, and it requires collaboration across the buildings and construction supply chain. So that's why this paper also calls on key industry stakeholders, so policymakers, real estate owners and developers, energy and real estate companies to support this sector's transition. So coming on to our recent progress report, where we did a stock take of progress from members with their target setting. As I said before, 76 of our members have set targets, 122 real estate emissions reductions targets for 2030 or sooner. And most banks have actually set targets covering both commercial and residential real estate, but some banks have chosen to only set targets for commercial or only for residential at the moment. And most of the targets are based on emissions intensity per unit floor area, and most of them focus on their clients' Scope 1 and Scope 2. About half of the targets were in the range of 26 to 50% decrease, and about the other half were in the range of 51 to 75% decreases in emissions. So they're good, ambitious targets. And but this sector, more than any other sector, had a very high degree of heterogeneity in terms of the pathways that banks are using. So most of them, I think, used the CREM, the Carbon Risk Real Estate Monitor, the CREM 1.5 pathway. But there were also many others, including the IEA and the NZE 2050 scenario. But I would note that some banks have decided not to set targets in this sector yet, and that's really because of real significant issues around data and realistic pathways to achieve those targets. So we're going to hear from some members soon about the approaches that they're taking, but oftentimes members are using client engagement, they're developing specific products such as sustainability-linked loans or interest-free additional lending, but also policy advocacy is now an increasingly important lever that banks have to pull. So that hopefully gives you a little bit of background to the Alliance. And I'm now going to hand over to my colleague Kavita to tell you a bit more about some of the other work underway at UNEP FI. Thanks.
Thank you, Sarah, for taking us through the work of the Net Zero Banking Alliance in the real estate sector and emerging practices for climate target setting for the real estate sector financing. I'm Kavita Sachwani from the UNEP FI banking team, and in the next few slides I will share with you a high-level overview of the work that UNEP FI has embarked on to support banks in transitioning from the what to the how to achieve climate targets through leveraging the nexus between circularity and sustainability. So in July this year, UNEP FI launched a series of guidance developed by banks. I think I need to do these slides. Okay. Sorry. Yeah. So in July this year, UNEP FI launched a series of guidance co-developed by banks, and the First Abu Dhabi Bank and BBVA are part of this working group. To support banks in integrating circular solutions at a sector agnostic level, as well as for high impact sectors like the buildings and construction sector to achieve net zero emissions or climate mitigation targets. As you can see, there were 4 reports we launched as part of phase 1. The first report illustrates how circular economy enables responsible banking by linking circularity with environmental and social impact. This also has case studies of member banks already integrating circularity into their business models. The second report delves into circularity and climate mitigation. The third and fourth reports are sector-specific supplements for the buildings and construction and the textile sectors, both of which are high emission, but also have high circularity potential. And as part of phase 2, we have started working on co-developing guidance with member banks on the agri-food and mining sectors. The next slide. So what is new about this guidance? I think the guidance is a first approach for banks to manage interlinkages between circular economy and environmental and social impact. It is conceived as a series of guidance which provides an overview of circularity and its nexus with climate, with nature, with pollution and social impact areas, starting with climate, like I said, at a sector agnostic level. The third, it has sector supplements which provide guidance for banks in high emission, high circularity potential sectors for easier adoption. And 4, it provides actionable recommendations for banks to integrate circularity in transition plans to achieve sustainability targets within the Principles for Responsible Banking framework. Moving on to the next slide, as we know, the buildings and construction sector contributes significantly to global climate change, accounting for 37% of global CO2 emissions. To decarbonize the buildings and construction sector, circular transformations are required along the value chain or a whole life cycle approach. With the expected increase in embodied emissions, it is crucial to strengthen strategies that enhance material efficiency, which can be broadly classified under the 3 categories that you can see, which is avoid waste and extraction of new materials, shift to renewable bio-based materials, and improve conventional materials by enhancing energy and material efficiency. The next slide, so the diagram, I know this is a busy slide, the diagram on this slide illustrates the process banks can follow to integrate circularity into their climate transition plans to achieve climate mitigation targets. It is the core of the guidance, and the same framework runs at a sector agnostic level as well as at a sector specific level. The approach focuses on 2 steps, as you can see, and I will not walk you through this. I recommend you read the guidance. The first step is identifying circular solutions and opportunities, and the second one is aligning financial flows and banks' portfolios with climate mitigation targets. The approach, like I said, has been explained in greater detail in the guidance, and then the guidance describes actions and sub-actions to integrate circular solutions and opportunities in banks' transition plans. So this highlights the 4 PRB action categories, which is client engagement, internal policies and processes, portfolio composition and financial flows, and policy advocacy. This forms the framework under which specific actions can then be taken by banks. The table that you see here is an illustrative list of actions. These are not exhaustive. Banks can take to integrate circular solutions into climate transition plans. So this is at a bank level. The next column is the impact or the qualitative impact of these actions on GHG emissions, which is at the client level for scope 1, 2, and 3 emissions, and the relevant circular business model category that they belong to. The report explores specific areas of action in all the 4 categories, like I said, internal policies and processes, client engagement, portfolio composition and financial flows, and policy and advocacy and partnerships. The next slide, I know we have Stephen here, but very quickly. So this is the European Energy Efficiency Finance Coalition, co-led by the EU Commission, 27 member states, 49 financial institutions, and of course UNEP-FI, which is bringing together financial institutions, member states, and industry leaders to scale up private financing for energy efficiency, which is a very critical factor in reducing energy demand for the net zero emissions by 2050, specifically for the buildings and construction sector. By driving the accessibility and affordability of energy efficient financing options, this coalition will play an essential role for the real estate sector, aligning directly with net zero goals in the buildings and construction sector. As the coalition finalizes its work program, upcoming calls for membership for offer banks and financial institutions an ideal opportunity to join this impactful initiative and reinforce energy efficiency as a strategic priority in their financing decisions. I will hand this over back to Sarah now for opening the panel discussion. Thank you, everyone.
Thank you so much. If I could invite the panel to come up to the stage, please. I'd like to introduce Stephen O'Driscoll, the Head of Climate, Environmental and Social Policy Safeguards and Quality Management Department at the EIB. Tony Balabriga, the Global Head of Sustainability, Intelligence and Advocacy from BBVA, one of the members of the Net Zero Banking Alliance. We've got Peter Hirsch, Head of Sustainability from 2150, which is a venture capital fund, and Ingelise McKay, Head of ESG Solutions in FIC at Deutsche Bank. So I'm going to stay here because I have a microphone here, and I'm so sorry that you're going to have to share this. If you could pass this down to Peter. Sorry, to Stephen. Stephen, I'd like to start with you. I know Stephen has to dash off in half an hour, so maybe you could go first in telling us all about the work that you're doing at EIB on the real estate sector and highlight some of the really what is the particular role of DFIs in this journey, and if you can share any success stories that you've got about facilitating the transition. Thank you.
Thank you, Sarah. Thank you for inviting the EIB onto this panel. Kavita talked about the coalition there. Good plug for that. That's well worth watching and getting involved in. And it was good that you also raised the circular economy point as well, because that's got a key role to play as we go forward. And certainly we at the bank are trying to integrate the taxonomy into our being. And of course, circular economy is one of the environmental sustainability objectives there. So, I mean, just from our point of view, I mean, the enormity of the numbers in this sector are just mind-blowing. It's difficult to get your head around them. I mean, in Europe alone, the investment gap is about 150 billion a year that we need to find, and the Building Performance Institute is saying that 97% of the stock in Europe needs to be renovated by 2050. I mean, it's just amazing, and this is bizarre because it ought to be a sector that it is, that is easily transformable. But so something needs to change. We need to look at the market, and we need to develop an ecosystem of services. And we need to probably, I'm just thinking in terms of the way we assess our projects from a cost-benefit perspective, we need to properly capture the multiple benefits of addressing the decarbonisation targets in this sector. We need to look at the labour market benefits, and we probably need to look at the what benefits there are in the increased competitiveness of the economy as a result of this work as well. So, I mean, this is very much the reason why we at EIB have kind of taken this to our hearts, and we've really increased the amount of our lending over the last period of time to a point in last year where our figures are about 8 billion overall from an energy efficiency point of view. And this includes 5 billion which was allocated for energy efficiency in buildings. But when you look at that number compared to the 150 billion that we need to find, it's only about 3%. I mean, the public banks are only ever going to be able to play a relatively small part, which is where we need to bring in the private sector, of course. And the buzzword of COP29 and also COP16 down in Colombia a few weeks ago was very much blended finance. So taking the risk out of the market, and this is what we're trying to do. So we're trying to leverage public funds, grants and guarantees and so on, and find some interesting structures, guarantees. And this is what we started to do. And I just wanted to refer to a couple of products. And technical assistance is a big part of this as well. So if you can de-risk it early on upstream, then you can really start to attract the market and bring private capital flow in. So we've been working with European regional and local private banks on what we call our green mortgages and green renovation loans. And a key component of that is being able to offer blended products which really fit the very particular geographical circumstance of each of these banks. They will have their nuances, and you know, these cover preferential rates, they cover guarantees, technical assistance, and where we can, a grant component as well for instance, for affordable housing, where we're addressing that. And secondly, we support the whole green buildings value chain through green intermediated financing for SMEs as well. So we lend to banks and they end on lend through to the smaller beneficiaries. And that could be providers of energy efficiency technology, in building materials and energy and environmental management providers and architects and so on and so forth. So it really is reaching down into the value chain. And then technical assistance is really important for us, and we've been working on that for a number of years through Elena in particular, which you might be familiar with, but also we've worked hard to develop what we call the green checker, green eligibility checker, which I'll come back to in a second. But collaboration and partnership, as you say, through the coalition, Kavita, is really, really important. So working with the other DFIs, working with the national promotional banks and these initiatives which you just referred to, they really are key. Without that, you know, we're just not going to go anywhere. Thank you, Sarah.
Thank you, Stephen. Really interesting. Yeah, I think blending finance is maybe something we'll come back to in a few minutes. And absolutely, it's really necessary, the point you made about the staggering scale of the renovations that are needed, and actually that does bring around quite a risk of stranding of assets, doesn't it, over time. So maybe Inga-Liis, if we could pass the mic down to Inga-Liis, coming to you, because I know you've actually been doing work with EIB as well at Deutsche Bank, and you'll want to get into that a little bit, but I think also some of the work that Deutsche Bank is doing on the real estate sector, and maybe also just contrasting the role of commercial banks with DFIs would be really interesting. So over to you.
Okay, great. Hi, everybody, and thank you for having me today. I think you underestimated how quickly we would get to blended finance, because that's actually going to be, especially since I've got Stephen here for a few more minutes, I'm going to go right into that when we start with that. So we are extremely grateful, actually, for support we've had from various public bodies, which have really helped us to make housing more affordable for our customers. So a key one I'm going to highlight, since I've got you here, is EIB. Earlier this year, we were able to give discounted mortgages on more than 600 million to our clients, our residential customers in Germany. And we were able to do that discount because EIB came in and guaranteed the mezzanine tranche in the securitization we did, and we passed that benefit on to the clients. So that's a very, a good example. So I think he was being modest when he said it's a small part. I actually think public bodies have a very large part to play in helping us get funding out to where it's needed. So that's on the residential side. On the commercial side, another success story I think I can talk about is we've worked a lot with Redaptive. And Redaptive is an energy as a service provider. And what we've realized as a bank is our biggest lever for decarbonization is working with our clients. And clients like Redaptive, who are leaders in, working to decarbonize real estate. So what they do is they go in and they provide, the HVAC systems, the solar panels, all the kind of equipment that clients might need to be energy efficient, but maybe don't have the capex to spend or the expertise to monitor. And they'll put all that in, and they'll have a contract, and they'll actually put in smart meters and do that for the client and partner with them to decarbonize. And so what we've done is we think that's a great story, and we've leveraged our structuring expertise and our ability to finance to help them scale up. So what we've done is we created a warehouse for them, where, which is backed by customer contracts. And by doing that, they are able to get the funding out quicker. And because we were able to structure that and also act as facility agent and account bank and verification agent and do the whole value chain, we were able to bring in additional banks. So we upsized that and brought additional banks in, and so they can further build out their platform. So that's, we have the partnership with the public side, but also with, real key innovators and leveraging our whole suite of products to help them. So that's important, and how that, I guess that touches on the difference between commercial and residential. I mean, I guess what I would say is, in all of them, you have to work with your stakeholders. It's all about collaboration. I think the others, my colleagues, have all said that, but it really is true.
Thank you, Ingalice. Really fascinating that these partnerships are really starting to bear such fruit. So coming to Tony, could you tell us a bit about what you're doing at BBVA? I know you've set some really ambitious decarbonisation targets, and it'd be really interesting to understand how you think differently about commercial and residential real estate, and also just also touch on how you're thinking about the different markets, because BBVA is there present in many developed markets, but also quite a lot of emerging markets. So over to you. Is it working?
Yes, working.
Fantastic.
Okay, thanks for the invitation, and great to be here. I mean, well, as was explained before, it's very challenging setting targets in the real estate, no? Because we have a lot of dependencies. Probably is for sure is the sector that we have more dependencies from others in order to set our targets. So we follow the approach that we have at NZBA, focusing on the operational emissions, which at the end of the day are 27% of the 37% we have seen on the screen. The other 10% is embodied emissions that we try to manage those embodied emissions through setting targets in those sectors that are hard to abate sectors like steel, cement, aluminum. So, but we have already set targets for the operational emissions, no? Well, we had a very deep discussion internally if we should set those targets or not, taking into account the problems that we have on data availability and also on the dependencies, from others. So, and then the reality is that it's a portfolio that is slightly different. And when you see a portfolio of, in our corporate loans in general, that's we have 5-6 years, those loans will be in our book. But when you check the mortgage portfolio at residential, you will have those loans for 20 to 30 years. So we have to take into account how to manage these in terms of stock and flow. And that's so the levers that we have are very limited because the flow is what is coming, but the stock is huge. No, so we have to play obviously on the flow through mortgages. We can comment later, no, but the main challenge is how to scale up on and get results on renovation, no, and retrofitting, which is a very demanding issue, no, and banks cannot generate directly demand for that. So I think that's one key message that we need from governments and to provide those policy signals, no, to create the demand. Because otherwise, okay, we can influence, we have a role to play to raise awareness, to provide solutions, provide incentives with those solutions, as we are going to explain later. But at the end of the day, we need this enabling environment more than ever, no? Depending on the governments, no? So that's critical. So what we have done is we have differentiate obviously residential and commercial. On residential, well, we have a start with what we can make it possible. I mean, we start with Spain portfolio. So capturing the mortgage in portfolio in residential in Spain, we get around 70% of our exposure to residential, 70%. So we decided to start with that instead of waiting other portfolios like Mexico. So we prefer to capture targets on that. We use the same metrics that are being, let's say, recommended by NZBA. And we have set intensity targets by 2030, which is reduction of 30% on residential. This is not exactly in line with CREM, and is in line with the PNIEC, which is the national energy plan that we have in Spain. Let's say that to achieve that 30%, 80% of that reduction depends on the grid. 80%. So we have to mobilize we have to mobilize how to decarbonize the grid. So only 20% is manageable through flow, the new mortgages, and through renovation. So that's why it's so critical to have this policy piece, no? And that's why we decided to align our targets, not at the most ambitious one, which is the CREM, but the national strategy policy that we have in place. So that's something that is a big, difficult decision to take. you could say, prefer I don't set targets, or you use what is the national plan at least to make step forward and iterate. That's what we decided to do. No? And then in commercial, we are a little bit more ambitious, around 44% reduction. And we are covering only 50% of our exposure, but we plan to have 80% of exposure next year, including Mexico as well. So that's how challenging it is to set targets in real estate. And then we can comment which other, let's say, how we want to implement those targets, no? What type of solutions we can provide to our clients in terms of mortgages or retrofitting, what type of additional initiatives we are taking into account, like investing in equity, in some technologies that can help decarbonize the sector, or how we promote, let's say, in general, more a decarbonized grid. No, this is also indirect effects that we may have at the end of the day. But very challenging. I understand that not all banks are progressing on this. But I think it's better to not to apply that idea that to have to solve everything everywhere all at once. I think we can be more pragmatic and set some targets that can provide some guidelines to the market, and then learning by doing.
Thank you, Tony. Very, very pragmatic, very pragmatic. And so let's move to a different part of the financial system. So I think oftentimes a lot of the solutions that we need to see across all of the sectors that need to decarbonize is the need for innovation, and sometimes that innovation isn't yet bankable, but it sits more within the realm of venture capital. So Peter, it'd be really interesting to hear from you about how you're thinking about the decarbonisation of the real estate sector as a venture capital provider, and what does your institution 2150 mean when you're thinking about, so I saw on your website you think about the urban stack, so tell us a bit about that. Thank you.
Sure, and thanks so much for having me on the panel.
Is that on?
Should I just go over there? Is that easier? Oh, there we go. Okay. This is why we need the technicians. Thank you. Oh, very and to present. No, it's not. It's coming. Okay, it's coming in and out. Okay, we're just going to proceed. So I want to tell you a bit about 2150, the venture capital firm that I'm a part of, and why we focus on urban sustainability in real estate. So when you think about what we're going to need to do to achieve the goals of the Paris Agreement, a lot of that fight, a lot of the solutions are going to come in cities. Cities represent about 70% of greenhouse gas emissions, 75% of final energy consumption, about 80% of global material consumption. Essentially, if we're going to decarbonize, if we're going to achieve our resilience goals, it's going to be largely an urban solution. Now, buildings within that space, depending on what city you're in, can represent anywhere from like 20 to even 80% of the greenhouse gas emissions of an urban area. And when you think about what kinds of innovations we're going to then need to achieve the types of decarbonization and sustainable transition of that sector, it really is sort of an all-the-above approach. Unfortunately, finance and how we've been looking at this space so far has not kept up with that level of challenge. When you look at the total amount of emissions that buildings represent, and you can also lump industry in there because the built environment uses so much cement and steel, collectively, buildings and industry represent about 50% of global greenhouse gas emissions. But in the private equity and venture capital space that I'm in, it only represents between 10 and 12% of overall finance moving in there. So there's this massive gap between where emissions are and then where finance is flowing. And so what 2150 is trying to achieve is seeing that we need a lot of innovation in this space that hasn't historically been there, and trying to find those solutions that we can then scale rapidly across the built environment that will help us decarbonize our building stock, make it more resilient, and ultimately be more affordable and attractive for those who are going to be using it. So some of the examples then, sort of how this manifests. Going in. Now it's back. Okay. We want to think about buildings in a holistic way. It's operational emissions. It's embodied emissions. It's how we use and operate these buildings and manage them. So we're trying to invest and find solutions that tackle all of these different challenges. I have a few examples of companies, and then happy to share more if you guys have any interest. But on the operational side, you can think about ways of increasing the energy efficiency of buildings, so critical. We've invested in one company called Luxwall. It has a new type of window that is a double pane window, but it's using vacuum insulated glass, which means that its energy efficiency or its R value or U value is better than that of a typical wall that we construct in Europe. So you can imagine how beneficial that is to the overall energy efficiency profile of a building. They're rapidly assembling and building in Michigan in the US, and they're deploying around the world. On the embodied emissions side, which is really a critical part of the built environment, something that we're going to have to continue to think about as we bring the emissions from the grid down, there's a company that we've invested in called Biomason. It is making new types of cement without the need for a cement kiln. It's literally using bacteria and then a little bit of fertilizer to break down traditional limestone into what is a chemically equivalent thing to OPC, to ordinary Portland cement. That they're turning into precast units right now with a goal to eventually get it to ready mix as products. That can reduce the overall CO2 emissions of cement anywhere from 50 to 80%, depending on how efficient the process is. And these are things that could ideally be drop-in solutions for either existing buildings or for retrofit, all that are available. But then on the management side, so you have to think of ways, how are we going to oversee the overall profile of our buildings and be able to look at the different ways that they're either exposed to climate risks or make sure that as maybe building owners and operators, you have the tools that you need to be able to look at the energy profiles and tweak them to be able to make sure it's as efficient as possible. There's a number of companies that we've seen in that space that are really helping to drive that type of innovation at a portfolio level. And so I think by showing that if you think about it from a operations, embodied, and management way, there's this really rich environment now of these startups that are coming to the fore, and something that we really hope can be mass deployable, because all those examples that I just put out, these are not technologies that have a massive green premium today. The ideal is that they're going to be very affordable in a short time period. They provide a very clear ROI today. This is not something where you're going to be taking a cut to the overall value of the asset if you're to install it today. So really it's about getting these solutions to scale so that we can achieve the different goals of those in the panel that have spoken right now much faster and in a much more economical way.
Thank you, Peter. I think one thing you said there was that there's this massive gap between where the emissions are and where the finance needs to flow. So Stephen, we can come to you again. So you spoke earlier a bit about some of the products and financial solutions that you're providing to the sector, and I wondered if you wanted to sort of drill into any of those a bit more. As you said, 5 billion is a huge amount that you've got going into energy efficiency, and you've got a lot going into real estate, but how can we scale that even more? And maybe you can get into some of the barriers also around blended finance and why that isn't kind of getting to the scale yet that we need it to.
I'd love to, Sarah, in some detail, but I've got to go in a couple of minutes. So
yeah.
My colleague Inga Lisa there explained about the securitization deal at Deutsche Bank. So, I mean, that's typical of the kind of concrete example I was going to talk about. If I may, just in the time I have available, could I just plug our 2 advisory services?
Yes.
Gratuitously, if I can.
Please
so
do.
We have Elena, I don't know whether people in the audience are familiar with. That's the European, what's it called again? What does it stand for? The European Local Energy Assistance thing, which is effectively like a one-stop shop for advisory services to help developers and promoters build energy efficiency and renewable energy into their projects. So, please do look at that. And the other thing that's more recent, actually, just in the last 18 months or so, is an open access tool called the Green Eligibility Checker, which is essentially, well, it can be for both our financial intermediaries and the final beneficiaries as well. And so this is an online tool which helps the FIs and the beneficiaries just look at the potential impacts of their projects as they develop them, so that they can actually ready them in order to submit to us for financing in such a way that will meet our criteria and so on. So that has gone down really well. There's an inside EU version at the moment, and we're just developing an outside EU version as well. So please do look at that, because it's quite revolutionary, and I hope it can help the market. Sorry.
No, I'm sorry that you have to leave us, but thank you so much, and best of luck with your next one. So Tony, coming on to you, can you tell us a bit more about some of those financial solutions that you're offering to the market to mobilize this change?
Yeah. Okay, it works. Maybe it's the battery, I would say, but anyway, I will try it. Obviously, the first product that we launched to the market was an energy efficiency mortgage with some advantages in pricing, and this is has helped to mobilize the flow. So that's something that is quite common in the market, in the different markets, not only in Spain but also in other countries. We are also having this product in Colombia, Peru, and Mexico, sometimes with the support of the multilateral banks, with some advantages in pricing as well. So that help us to provide a better value proposition to our clients. So this is something happening not only in developed markets but also in emerging economies. But the most innovative solution that we are now pushing is is all related to energy efficiency and retrofitting of the stock. How we can engage with our clients in this area. What I said, it's more important to have this, let's say, grid decarbonization, but there are some steps to be done. So what we have done is to embed this in our mobile app, where we have a very strong engagement with our client base. We have an app that has been recognized several years as a best app in banking, and we really are engaging with clients, starting for sharing the footprint they have in carbon footprint. And thanks to that proxy that we provide to our clients, then we offer these different type of solutions, obviously in auto, but also on home. So we have created something like one-stop shop for home, where you can get all different solutions, beyond mortgages. And obviously we start with solar panels as the main, let's say, main business opportunity. At the end, we want to capture a disproportionate market share of this investment cycle. That's the brief. So if we have a market share of 14% in Spain, now we are capturing 35% in solar panels in Spain. So that means that we have the best value proposition in terms of pricing and engaging. And if you are a client of BBVA, you can see where you can put your solar panels. You have an assessment of the savings that you are going to have, so we can really help to take a decision that can be completely digital, and with a strong partnership with like Iberdrola and other key utilities to provide that solution. But then now we are opening this to the retrofitting, so obviously to the heat pumps, the windows, and all the different elements on the retrofitting. So all this has been possible thanks to the engagement through the online on website, but also mainly as an app on the phone. So these are the practices that we are quite promising. Obviously, it's still not so big amount of coming deals and so on, but this is we are, as I said, we expect on the retrofitting to have also a disproportionate market share thanks to this approach to clients. The focus is focusing on savings. Savings. This is the only way on the retail you can get things moving, and that's and make it easy. And that's the simple, two convenient, let's say, recommendations, and that's our learnings. But then obviously we want to extend this app to Mexico and other countries, but we have a start in Spain with quite promising results. So that's, I think, is the best way to help our clients in the retail space.
Thank you. Yeah, and if we can't do it now when energy prices are so high and get those savings in, then when are we going to be able to do it?
It has been quite challenging because 2 years ago was the context was a little bit better because the prices were higher, and so all related to, for instance, to solar panels and retrofit. So the awareness of our clients were higher. But in any way, the business case is there. So the point is how to make it simple for our clients, and how to provide solutions easy to activate. No.
Yeah, excellent. Well, Ingaliz, let's come to you, and maybe if you can talk a bit about some of the solutions that you're finding, ways of overcoming some of the barriers and inertia in the market.
No, thank you for that. I mean, I think, Tony, that was actually really interesting to hear, and I'm glad that you also are pursuing that customer education, because I think that's really key, and that's something that we're also doing. Because you have to, it's all this language can be very intimidating for the normal person who doesn't do this as their day job, right? So a big part of this is advisory, and we also put a huge effort into that, advising our clients, and also going back to the public-private partnership. A big part of what we do is we make available all the grants and funding that they could leverage. So, for example, in Germany, KfW, which is a development bank, they do a lot to fund low-cost mortgages, and we make an effort to educate our client base about that so they know everything that's available to them. So I can't emphasize enough how important it is to really maximize all those touch points you have with the people who are affected, and educating them. I think that was also a big driver, of me being here, for example, because it's not just our residential clients, but it's also our corporate clients and our sovereign clients, coming here, talking to each other, educating each other about where we are, how we can help each other. We were a big player in the Net Zero Banking Alliance, real estate stream, and that paper that came out. We had a big part in that. We last year published our approach to getting to net zero in the residential real estate sector, to share our learnings with others, and to explain some of the challenges we face. Also on the social side, with getting to our targets, where these are we're a major German bank, and we can't. There's a challenge between wanting to get there, but then knowing that we looked at to get from EPC G to A for a normal client we had would be more than €100,000. And we all know how much money that is for any of us. And we estimated a third of our clients wouldn't be able to get there. So we had to get out there and educate also everybody else about where we are on getting there and what our challenges are also on the social side. So it's really key to share those learnings, also with other NZBA members. So I would say education, huge, very huge. And advocacy, that was mentioned earlier. I think one of the three, was that what you had mentioned? One of the three key points from that paper, advocacy, is incredibly important. And I think the final one I'll mention, it was touched on earlier, but there wasn't a lot of time spent on it, is thinking across the value chain. So what we do is we have announced net zero targets for 7 of our highest emitting sectors, and those include steel and cement, which we know are massive inputs and a big part of embodied emissions. And we've put a huge focus into we're well on the way to getting there. And partnering with clients like H2 Green Steel, and getting our clients to where they need to be, so that the inputs to our real estate, those embodied emissions go down. So I would say that's incredibly important as well.
Yeah, definitely. So coming to you, Peter, as in venture capital. So it's all about sort of finding those startups of today that are going to scale and be the big players of tomorrow. And yeah, I thought maybe you could go a little bit more into some of the solution providers that you're investing in. Is it all about? I mean, you talked a bit about some that you're actually covering across new build solutions, but also embodied emissions and retrofits. But yeah, how's the retrofit side going?
It's
Is that not? Do we need a new?
okay.
Oh, there we go. Okay.
There we go. I'm very unlucky with this one. Okay. All right. So there's I'll restart. So I think the question was about retrofits, and then the point that Inga Lisa made was about this education side of things. I think for us to actually get to be effective in the retrofit market and to even have us have investable opportunities in that, when I'm a residential homeowner, a commercial building owner, I need to understand that there's all these new technologies out there that are available, but how do I actually get access to them? What's the financing mechanism? Is this going to be easy for me to actually integrate this into my home? I think some of the work that Deutsche Bank is doing and BBVA is fantastic, but there also needs to be sort of a middleman between them that's helping to take what are these solutions like heat pumps, PV, chargers, batteries, to be able to have the financiers be able to back them, and then a solution provider, the middleman, be able to get those into our building stock. So we're investing in a couple of companies that are helping to accelerate those types of models, that are helping to then retrofit these energy systems.
Oh, so sorry.
No,
Yeah, yeah.
I'll finish my statement.
Okay.
It's working again.
You know what? I was just going to finish this over here. So the two companies I was going to mention, one of them is Einkama Fünf. Do you know them? It's a German company. It's helping to accelerate the installation of heat pumps, PV, chargers, and batteries into German homes. And the main education piece there is that if I'm a homeowner, I don't necessarily understand, is it easy for me to get a heat pump? What's going to be the return on this? Is this something that ultimately is going to give me a payback in a short period of time? And how do I even choose the right heat pump? So there's a huge market there for us to be investing in these types of companies that are helping to proliferate the installation of these and ultimately really build a scalable business that will accelerate the retrofit of a large part of the market. We're doing a similar thing with a company in the UK called HomeTree, and it's something where we hope that we can continue to find financiers to back these types of business models. Very unlucky with that.
Thank you. I do think it is incredibly difficult to know how to go about this as a retail customer, even if you're quite well informed and you know you actually would like to be installing some of these technologies. It's remarkably hard to find a trusted supplier or, know where to go really for it. So Tony, let's come back to the perennial problem of data. So as we know, it's always data, data, data. We know that EPCs are actually quite a poor proxy for the energy usage of a property. And EPCs tend to be a bit patchy, incomplete. You know, maybe they're only updated when a house is sold or something. So, how do you overcome those data challenges as a bank, and how can we overcome them? And the other thing is, how can we better advocate for better data harmonization across jurisdictions? Because I mean, you were saying you got Mexico, but Spain as well. I mean, presumably your portfolios across the world look very different when it comes to your data quality.
Yes, let's see if it works. Yeah, it seems I'm lucky. I am lucky guy. No. Okay, well, not so lucky. I mean, well, the first challenge is, as you said, is the availability of EPCs. Even in Spain, we have only 30% availability practically today. And so we get 80% through proxies. So at the end of the day, we are assessing what we have, and we are putting our targets on the basis, relying on this 80%, but a lot of them are on proxy. So
It's terrible. I'm so sorry.
Don't worry. So no problem. So the APC's availability is absolutely critical, and it has come a nightmare, at least in some European jurisdictions, also in Spain. Also, we have an additional challenge, which is the lack of harmonization. So an ABC labels in Spain there's nothing to compare with ABC labels in France or in Germany. So that's another issue. The Spanish government is going to tackle this theoretically beginning of next year. Let's see, because that depends. We are depending on this data also in our, let's say, in our engagement with our supervisors. So this is absolutely a key issue. But beyond that, this is in Spain. But we go to Mexico, we don't have any APC label out there, and there is no plan to have an EPC label on the short term. So this is even more challenging for emerging economies, no? Then also is another challenge that is quite specific in Spain, which is we have a lot of community houses. So we live in flats in Spain. 2/3 of our houses are flats, living communities. So all related to retrofitting, renovation. It creates more complexity because you have to take agreements for the whole community. So this is even more challenging for institutions in countries like, for instance, in Spain, no? So these are some of the key elements. We really welcome the initiative promoted by the European Commission that was mentioned, this Energy Efficiency Coalition. We are one of the 20 or the 49 financial institutions participating in this coalition. And we have set up a specific chapter in Spain to see how we can overcome these data gaps, and because it is a clear enable, no? To help us to make our work. So that's a key challenge.
Peter, maybe I don't know if you've got anything to add in, if you'd like to come over in terms of the. I can imagine that quite a lot of these data solutions are quite sort of techy, and there's all sorts of stuff that might be happening, I don't know, Internet of Things or AI or sort of sophisticated data innovations. Is there anything that you're seeing come to market on the data front that's going to help us?
No, it's a great point, because I think, and actually I wonder if this would be something that you could answer as well, because we've seen a number of companies that are helping banks understand their mortgage portfolios to be able to see what are the ones that are sort of the most economical and sort of most primed for any type of retrofit. So if I'm an existing mortgage holder, what could be either the ones that have the best opportunity to have certain types of energy retrofits in them, or what's the sort of financial status of the borrower that would enable them to do so. But beyond sort of the mortgage portfolios, we're also seeing a number of data providers that are able to provide these sort of holistic data sets that look at not only the EPC, but the actual meter readings, some, as you were mentioning, AI to understand what the approximate kilowatt hours really is, even if the meter is not exactly right, so that you can get a very granular vision of, if I'm looking at this portfolio of buildings, what are the exact energy use profiles? What's the potential renewable energy production from them? What are the different types of energy sources that I could be pulling from to decarbonize these assets? It really is sort of a rapidly growing space that will enable this type of innovation. So we have a much more clued in sense of where we should be targeting our efforts and what are the buildings that we can move much more rapidly along the energy efficiency journey, and what are the others where it would be a little bit more of a struggle.
Thanks, Peter. It definitely makes sense to really try and target our efforts, because the scale of the issue is so big. If we don't prioritize ruthlessly, we're just not going to kind of, follow those 1.5 pathways. So I'm going to come to the audience in a few minutes for questions. So do start to think whether you have any questions for the panelists, please. But before we do that, Inga-Liis, I had one for you, was to really come back to the point that you made earlier about policy advocacy. There's this hugely widening gap between what banks have committed to in terms of decarbonising their portfolios and what we're seeing happen in the real economy. So what policies are there that you think will really make the difference and move the dial on this? And maybe those policies, well, I'm sure those policies have to be quite different for residential and commercial real estate. So yeah, it'd be great to know how you're thinking about that. Not going to risk it.
Yeah. I think there would be something wrong if we got to this point, and I've been speaking this long, and it didn't sound a little bit like I was repeating things that have been said earlier, then we probably hadn't been getting the right messages across. So the first one I'm going to say is harmonization of standards and standardization of things as much as you can. And I'm saying this specifically as we probably have policymakers in the room. You can't fix what you can't measure. And it's a huge problem right now that there's so much, for example, energy efficiency, there's so little data on it and it isn't standardized. So, I mean, Tony spoke well to it, the EPC problem, right? So there's very little visibility. Some countries have databases, some don't. It's very patchy. You know, some places use, US uses legal, we for commercial, then some places use BREEAM, some people use EPC. It makes it very hard to, consistently analyze your portfolio and really identify the clients who, need most efficiently you can go in and help. So we're wasting a lot of time on trying to figure out what the problem is because we don't have good data. So please, anything the policymakers in the room can do to harmonize and standardize and think about that with energy efficiency metrics, that would be very much appreciated. That's a big ask. And then I'd say, secondly, a big part of it is, your emissions intensity. And Tony spoke to this as well. It's not just the energy efficiency of your building, but it's the energy you're using, right? So the grid is incredibly important. So I would say policies that promote renewables and really good infrastructure, local infrastructure are important, right? So you can either put a heat pump in every house or you can put in district heating. So there's things that you can do as policymakers to make it easier in terms of making that renewable energy available to our end clients. So those are probably my two biggest asks. I know we've said it before, but they are probably the ones that are going to move things the most.
So now we come to the opportunity for you to ask the panel questions. Do we have any questions? Now, I don't know if this is probably not going to work. I think it might have died completely. All right, so we'll have to do this without a mic. Anybody got any questions for the panel? Yeah, Ian. Yeah, just shout. Ian. Yeah, come up. And just to say, we'll take 2 or 3. So if you've got a question, do just come up, please.
It sounds like there'll be a queue for questions. Ian Buller from UK Finance, the trade body for the banking sector in the UK. Firstly, this has been an incredibly useful discussion, so thank you. Really rich examples. I wanted to pick up on the last discussion around policy, but also the identification of homeowner demand as one of the key barriers to getting this done. I wonder if you can say anything about policy levers that you've seen working well to stimulate demand among homeowners and other operators of buildings.
Thanks. 3. Anybody else got any questions for the panel? No? No other questions? Okay, that's fine. Ingalise, why don't you take that one and then we'll move on.
I'm going to have to talk about the UK since that came from you. One thing that's really been efficient in getting people to talk about upgrading their stock is the EPC regulation you've put in for commercial, saying that if you don't have a certain EPC level, you won't be able to rent out your property. And there's nothing like saying you're not going to make money on your asset to get people moving. So I think that has been very efficient, and people actually talk about the UK as an example there. So I mean, yeah. So that's money talks would be the answer. And then yeah, that's the one that comes to mind. That's probably most relevant to you.
I can share the experience in Spain. We thanks to the Next Generation EU package, we have 3.1 billion euros of public support for retrofitting in Spain, but it's not working properly. Probably so. Well, one reason is, as I said, this community houses that we have, flats that we have in, it's something that is conditioning because. It takes a lot of time to make, let's say, move the whole community of a flat to take an agreement on this. We are working on that quite seriously, and even understanding that there is no legal entity. So in terms of risk management, it requires also a specific framework to approach this type of use case. So it's not only about regulation incentives, it's also as banks, we have to change. So, but coming back to the incentives and the subsidized, I mean, our assessment is that there is a lack of awareness in general of the existence of these incentives. There is horrible processes to fulfill to get this happen, and then obviously the business case. Well, it takes time, so it's not immediate. And today, well, people wants to, especially for houses, it takes time to raise the awareness and to get things moving. So we think that it will be more productive if a government to take a lead on awareness topic. Obviously, this type of setting targets that will be also helpful. But taking into account the short term, we think that awareness will be absolutely critical, and take some advantages to do that. So normally we should see how we can provide more support in advance instead of waiting for subsidies. We were commenting, I suppose, yesterday morning that for solar panels, it takes 3 years to get the subsidies, so it doesn't work. So I have solar panels at home, I'm waiting 3 years for the subsidies. It's absolutely ridiculous. And that's what's happening. So I think that although we have money to do that, it's not activated properly to make the right change, the behavioral change that we need. So I would say simplifying what's happened.
Then maybe to make a bit of an obvious point, like demand is really tied to economics. So coming from the UK, we know that the spark gap there is one of the highest in Europe. Essentially, our electricity costs way too much. So if we're going to have people switch over to heat pumps and all of a sudden they know that they're going to be spending more to run that heat pump than if they just ran on a gas-fired boiler, why would you make the switch? So I think that there's a lot of policy right now that could be addressing these basic economic drivers that will ideally, when you have your neighbor all of a sudden save half of their energy costs as they switch over to these more sustainable solutions, that can obviously provide the right types of incentives that can make it proliferated. A number of incentives in the UK and other places that are helping to bring down the initial upfront costs of these energy systems is fantastic. But ultimately, it comes down to why would this make sense for me as a building owner, operator, or homeowner that would want to see that, and that's addressing some fundamental parts of our energy systems.
Okay, well, I'm going to take the moderator's prerogative then, if there are no other questions from the floor, just to ask an extra question really around the social aspects of this. So the social aspects of housing are pretty huge. I think it's often the least well-off people that are in the worst quality housing, and often, you know, in a situation of fuel poverty, which I think in the UK we define as spending over 10% of your income on heating your home or fuel. And so, you know, but they're obviously the least able to afford. I mean, Inga-Lise, when you said that a deep retrofit costs 100,000 euros, and was it only a third of your clients could afford that? I mean, a third wouldn't be able to afford it. I would have thought that would be much higher than that, actually, because there is a real affordability issue. So, you know, how can we kind of overcome that? How are you thinking within your firms about the social side? Because, you know, some potential policy actions could have unintended consequences for people that can't afford to finance retrofits, and you don't want people to have their collateral, that, you know, the value of their house drop in price, or, you know, find that they can't sell their house because of some kind of policy measure. So, yeah, over to you if you've got how you're thinking about this.
Not easy one, but only to share what we are exploring at this time. We are exploring a pilot with ANESE, which is a Spanish association of companies linked to electricity and energy efficiency in Spain. And so we are partnering with them and also with an NGO to make a pilot for retrofitting in vulnerable homes and families. But it's only a pilot. But I mean, we want to learn what we could do. Not easy because the business case is even more complicated. But I think that what I would suggest is, well, learn by doing, as I said before. So we have to explore this angle because absolutely critical to see how we can help those families in those vulnerable homes that yes need a lot of support. So I think it's also important.
Well, I already talked about Germany, how we published our target, we disclosed where we are with our footprint on residential and the pathways, but we're cautious about, committing because of that problem we have with a big part of our customer base. So, what I could say more on the commercial side, there's a lot of issue in terms of housing and just availability of stock, so of affordable housing. So we're a huge municipal we have a huge municipal bond affordable housing business in the United States. And one thing we've done to kind of promote that and keep that going is we expanded our green bond issuance program. We added social last year, and to be able to fund more of that, and that's basically mostly affordable housing in the U.S. To really build that out, because there's an issue of stock, and we've expanded that to Europe as well. Where we can see in the UK we have an issue with availability of affordable housing stock. So that's something that also has to be tackled.
Last point to make, I think, is on really intelligent policy design. I don't know if you guys know about LL97 in New York. It has a limit on the amount of carbon emissions that buildings above a certain size are able to emit. You are then charged per ton of CO2 if you emit beyond that. The law was designed in a way that building owners and operators cannot pass the costs of retrofits on to the occupants. And when we've seen then this onus of essentially the cost of the retrofits and how they're going to have to be seen through, done in a way that is sensitive of these social concerns, I think that's something that we'd hopefully want to see replicated in other areas where ultimately, if it is going to be those that are the most energy poor that have the hardest time actually getting to a point where they have the retrofits that they need or the energy systems that they need, we can't be expecting to also pass the costs off. So I think it's on an intelligent policy design that we need to think of ways then to make sure that the costs of this transition are equally distributed as well.
Thank you. I have a question also to the panelists. I would like to know how the financial sector is going to adapt to the adaptation challenges coming ahead. We recently saw all the floods in Valencia in Spain. So is adaptation becoming a topic for the financial sector, and how also you're going to address it for insurance-wise? Yeah, thank you.
Yeah, no, we have a very big infrastructure and energy practice, and that what? Okay, there. So thank you. So we have a very big infrastructure and energy business, and so they're very much on top of all of that. So this is obviously a very key consideration in everything we do, and I think a big part of that is just baking into your loan documentations any requirements you have in terms of how those properties or those projects are developed. So that's one lever we have as banks is, we're in control of those docs. And if you want the money, we have to reach an agreement on what's in that documentation. So that's one lever we have that you can use. And another is just, working with partners that we have, environmental social due diligence providers and lawyers and insurance providers, credit risk insurance providers. We know the whole value chain and getting clients in touch with the right people to help them when they're assessing projects and working together so that you can kind of reach a risk return that works for both sides.
Yeah, well, no. Yes. No, yes. No, well, no. I mean, resilient finance is absolutely critical and is gaining momentum. yesterday we had a session on that, also just transition, but resilient finance is also in the EU. There is initiatives on the topic, and adaptation is absolutely critical. So, well, we as Ling said, no, we work on the infrastructure side with our clients to see how we can ensure that they incorporate this more long-term frame planning in the projects that we finance. So this is just a starting, but this is something that will be absolutely mandatory. Sometimes regulations made some preliminary conditions, but in some cases we can do more, especially in emerging economies where the regulation is not so strict. But this is an area. But then we have another area when we can support to companies, to corporates in some sectors that, let's say, have higher physical risk. So we have identified the key 5 sectors that where we see more vulnerabilities in terms of physical risk. And we are now assessing the 200 big clients in those sectors, geolocalizing the assets and understanding the vulnerabilities they have. Let's share that 2 out of 3 of our corporate clients at that level has at least one asset in high stress or vulnerability, so a physical risk. So this is something that's quite common. So we starting to engage with some clients in those sectors to understand, or to share what we know from them, share what they know, and see we can help in order to have some investment opportunities in terms of adaptation or resilience. So this is another area where we start working on that. Then obviously in terms of mortgages and properties also is something that we are embedding, because the supervisor also asked to have physical risk already embedded into our assessment. And finally, we have an approach to resilient finance through thematic investment or thematic lending. No, so focusing on water and focusing on agribusiness. So water, so we are already providing some solutions with some loans linked to specific metrics that our client, for instance, with Iberdrola, we had 2.5 billion credit through with other 24 banks, linking the energy, the water efficiency they have as a target by 2050. Or we have in Nestlé in Mexico, sustainability supply chain finance, linking some metrics to the water usage and soil usage of their farmers. So this is something that is growing, and we see this also as an opportunity. So a lot to do, still emerging, but something quite promising. Thank you.
Thank you. Right. Well, our time is drawing to a close, so let's end with just a quick fire round. I'd like to just ask you all, what is it you're looking forward to in 2025? So we're coming towards the end of the year. What's your institution going to be focusing on in this regard next year? And also, because we're only a few weeks from Christmas, you get a Christmas wish. So if you have a single most important ask of one key stakeholder that would make the biggest difference to you in terms of decarbonising your real estate portfolios, what would that be? So we'll go in order. Thanks.
Yeah, so for next year, I mean, what I'm most looking forward to, again, it's a client business. I'm looking forward to working with our clients to get deeper into solving those problems together. I mean, that's the only way we're going to get there, is collaborating. And that's becoming even more and more important as the whole problem gets more and more complex, right? So you're getting the whole adaptation problem coming in, and it's the issues are the carbon footprint, adaptation, all these other issues that 10 years ago you weren't even talking about, right? So that collaboration is what I'm looking forward to, continuing that and solving problems together. And then the wish, it's not going to surprise you, given what I said, and given there's a lot of probably policymakers here. It's please, I know other people say it at COP, but harmonization and standardization. If you want us to scale, we need help. We need it to be as simple as possible, and then we can focus on solving real problems instead of like scratching our heads with data and how we compare things. Yeah.
Okay, so for next year, we as a fund have not invested in the steel space yet, and I think we're pretty close to getting there. So really excited to tackle. We've tackled cement and concrete. We'll probably continue to invest in that space. We have yet to sort of tackle steel, but I think there is the chance that we'll be getting into that. But I think my big thing on the wish list is venture capital funds like ours and all the private equity investors and all in the sort of space that's forming around this, we can put as much money into this space as we want, but ultimately the success of these and the ability to decarbonize our building stock comes down to, can we actually build enough of this stuff? Can we build the equipment? Can we get the factories up and running? So my big ask would be to continue this momentum that we're starting to see in the US and the EU and elsewhere to actually build out this industrial base that we can have enough of these technologies to integrate into our built environment. Without that large industrial ramp up, we're not going to get the cost curves down. It's not going to be something that we can actually achieve. So I think it's something that we'd really hope to see as a mission to be able to see that transition accelerate in the next year.
For this Christmas, I will ask a list of EPC labels from our mortgage portfolio, but I don't think that wouldn't be possible. So, but having said that, for the next year, my wish is really make a clear step forward on policy engagement concretely in Spain, with thanks to this energy efficiency coalition. I would like to see to end next year with a clear understanding that we need incentives for retrofitting. We need upfront processes and simplified processes, and at the end of the day, we need policy based on demand policies, policies on demand, because that's the only way we can play our role to help our clients in the decarbonization. That's my wish.
Well, it's just been the most fantastic discussion. Thank you all so much. We're well over time, so we're going to wrap it up there. But yeah, thank you for sharing your insights, and it's great to have so many perspectives. Thank you so much. Everybody join me.